Roblox stock has gotten hammered in just the last few months. It's down something like 60%. In the last few days, it's down like 30% on weak fourth quarter 2021 results. We're going to talk about that and more. I'm planning on doing a series on all these different companies that have gotten absolutely slaughtered recently, trying to find value in the rubble. So if you have a company where you're like, wow, this is now dirt cheap, this hyper-growth company, leave a comment below based on the number of thumbs up and likes. I will judge, what are potentially some of those completely destroyed companies that I should be looking at are and making videos on. So definitely leave, thoughts below. This is just one of them. We're talking about Roblox today. RBLX is the ticker. So why are they down so much, and is this a potential opportunity? If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did not own stock in Roblox. RBLX is the ticker. And so, first of all, one should understand, I've done a few videos on Roblox. If you want to understand their business model, check out those videos. This video is more focused on their most recent quarterly update and why the stock is getting completely beaten up, and what does it mean for future potential returns as you update your assumptions. So Roblox posted very strong revenue growth of 83% year over year. You could see nearly $569 million. That was in the fourth quarter 2021. That's down from 102% growth in the third quarter. So still very, very strong growth. And you see this, and then on face, you go, why is the stock down so much if you still have this monster grower of a business? And the reality is that revenue is not really the metric you want to be looking at. You want to be looking at bookings, because revenue is this heavily adjusted metric that's based on effectively when a customer exchanges the cash and adjusting it for the lifetime of the user. So it's a way of saying, like, look, bookings is the cash that comes in right now, this month. That's the bookings. Whereas revenue is a function of, well, how much of that bookings is used right now and how much of it is used over several months. And this is a function of folks taking real hard-earned cash and converting it into the digital Robux currency that then gets used over potentially months or years. So it's spreading that bookings out over time. I personally am a big fan of cash. I think a lot of folks are here who watch this channel. And so when you want to follow cash, that really tells the story. And that's why I'm following what does bookings do. That's a good leading indicator of what revenue is going to do in the future. So revenue is one metric. The real metric to follow, in my opinion, is bookings. So when you look at bookings, it tells quite a different story than the revenue results, as bookings was only up around 20% year over year. And that's a significant decline from last year when you're talking about triple digits. So what is going on here? There's a couple of red flags. Daily active users in the US and Canada, North America declined by 1% year over year. So this starts making, users and investors consider, hey, has this platform peaked? And that is a legitimate concern. Is this a problem that this platform is peaking? Now, this is a bigger deal than just, hey, these are US users, because if you look at the US, management calls out the US and UK specifically as being very large contributors to bookings, i.e. the users that play in the US and the UK, they spend more, let's say, than the rest of the world does. And so if the folks in the US start not playing, that has a disproportionate impact on their bookings, on their revenue. So you might have fantastic growth in Asia Pacific. You might have fantastic growth in the rest of the world. 100% growth in Asia Pacific. 46% growth year over year in the rest of the world. But if they're not spending as much as a user in, let's say, North America, that's a problem. And another aspect, another challenge, is that the hours engaged are declining even worse. So not only did you see a 1% decline in North America, now you're seeing over 10% decline in the hours engaged. So that means people are disengaging from this platform. So it does, it makes you wonder what the long-term value proposition is, and are they potentially at a saturation point, or is this really a function of a return to societal normalcy? And so that's really, societal normalcy going post-COVID, that's clearly playing a big role. That's what management attributes it to. But it does create this uncertainty going, wait a second, was this just a beneficiary of COVID, and will people still keep playing it after COVID's over. And so far, the data suggests, 11% drop from the prior peak. Yeah, that's not great, but still, the number of users, it's still retained a significant amount. So this does suggest that a lot of folks are still using it. But it does create more uncertainty around their future growth rates. And with more uncertainty requires a greater range of assumptions for the business. Then they also posted their January 2022 key metrics. While their daily active users was strong, over 30%, their bookings was actually flat year over year, 2 to 3%. This is January 2022. So they're trying to give you forward looking, saying, hey, this is what we're looking at. So effectively flat amount of cash that's coming in. Now, arguably, you'd say that is, you could spin this a couple of different ways. One way you could say is like, well, this does reflect that this platform's very sticky. Another way to spin it is, wait a second, does this mean that they're not going to be able to grow in the future? So that, it does raise that concern. How can you value this as a high growth business when bookings is only flat? And then worse, you look at average bookings per daily active user is down 22 to 23% in January. Once again, this is part of the dynamic that you're looking at when you have, let's say, the fewer users in the more rich daily active user countries, like in North America. You see a 1% decline there, offset by lower monetized users growth in the rest of the world. So you see rest of world growth, Asia Pacific growth, where it's a much lower dollar monetization per user. So if you have the users grow there, but not as much growth in, let's say, North America, you are going to see a figure like that average booking per daily active user decline by a significant amount. So that does raise a concern. So the question does become, what does their growth look like in the second half of 2022? And this is the commentary that management had to say about the trends they're currently seeing, saying bookings for now are driven primarily by the United States and the United Kingdom, which are both opening up from COVID restrictions and returning to school and work. So this is returning to normalcy. That's how they're framing it. While engagement and payer conversion are higher than they were going into the pandemic in these countries, this is where year-over-year comparisons are currently toughest. So this is the reason why bookings is flat. Year-over-year bookings comparisons should improve starting in May-June timeframe. So you should start seeing growth pick up again, they're arguing, by the summer of 2022. Okay, so what is the current valuation when you think about this? What's the new risk reward when you consider a broader range of assumptions, considering possibly a lower growth scenario? First, a quick plug, where if you're interested in joining a community of fellow investors looking to learn and find exceptional companies, we have an exclusive community on Discord. You could sign up at unrivaledinvesting.com, click join the journey. I also call out potential multi-baggers and share my own personal portfolio for those interested. And so post-COVID return to normalcy is hurting their results, clearly. The uncertainty over their future growth is significantly worsened by the concerns that there are extremely shady elements to Roblox, including pedophilia and illicit gambling. So those are some really big concerns. My friend at the Bear Cave wrote an expose on the matter, so I'd recommend you check that out if you're interested. Personally, in my own due diligence, checking out the app and the various different experiences, I haven't come across anything like it. I would suspect if the majority of the 50 million users that were to come across it, you would see a rapid decline. So I would suspect this is largely in the fringes. That said, it's impossible to perfectly police a community of 50 million daily active users. So you are going to have bad actors, no question about it. And so that's the question is, are they allocating enough resources to make sure you do a good enough job policing this? And management does remain committed, at least they say, to invest in the community and safety. We'll see, however, if these lapses lead to significant litigation or user churn in the future. It's definitely something to be mindful of. At this point, I think if anyone queues into Roblox right now, I'd be surprised if you can quickly find shady content like what's being called out here. I'd be surprised if you can quickly say, oh, wow, there's just a ton of it. I think broadly, Roblox management is doing, seems to be doing a reasonable job keeping it clean based on the content that I've seen so far. And so that's why it's to encourage a conversation of saying, well, wait a second, is this a couple bad actors or is this a bigger problem where, the whole system should be taken down? Because too great of a percent of that 50 million users are bad actors? And that is a tougher question to answer. And that's part of the reason why at this point I'm on the sideline just watching. So in order to buy Roblox at the current price, an investor needs to have conviction that the current slowdown in bookings, currently around flat growth in January 2022, they have to view this as a one-time problem. This is a return to normalcy. This is post-COVID slowdown. You're going to have a resumption in growth. Arguably, if growth is 20% or less in the years ahead, you'll likely look at a lousy return. That's at least what I'm penciling out here in this hypothetical framework. I'm saying if you have 20% growth in 2022 in bookings and then 20% in the following years. So that assumes 20% annualized growth in the years ahead in bookings. And it effectively says, hey, if that's the case and you're able to get margins way above where they currently are, keep in mind they are not profitable currently, assuming 30% plus margins on their bookings, because I prefer to think about it as the cash in, and assume a 20 times multiple 5 years out, you effectively get flat. So if you are an investor in Roblox, you have to have a strong degree of confidence that their growth rate is going to materially pick up from what they're posting in January. Management believes it's going to pick up by May and June, but that is a high degree of uncertainty. And because of that uncertainty, I think it's really important to have a wide range of possibilities. This is a wider range than what I previously penciled out. And when you have uncertainty like we have now, it's going to create more uncertainty with the stock, a greater degree of possibilities for what ends up happening to the stock price. So this is my hypothetical framework. Of course, stock price can go way higher or lower, but looking at this, penciling out a range of different assumptions, now you're looking at like 100% upside and 50% downside. Assuming on the downside, maybe they only compound at 10% bookings from here. Now that's clearly well below what management is targeting and believes they can do. Is management believes that Roblox can get to a billion users over time. For context, you look at some of the major social media platforms and they have billions of users. So management saying, look, we think we can 20x from here. We think we still have a lot of growth. We think the concerns about the community and the safety issues, those are largely overblown. People will stick with the platform. So far, the data suggests people are sticking to the platform and they aren't turned off by any sort of shady elements that are out there. And so ultimately, I'm looking at this, I find it interesting, but I don't have the high degree conviction to say, yes, I strongly believe this should be growing at, let's say, 30% plus in the years ahead, and they're going to get to those juicy margins. I have trouble getting there. But if you have a strong opinion on it, I'd love to hear it on why you have strong conviction. Oh, yes, this platform is definitely going to be growing 30, 40%. I want to understand why you think that's the case. And what are the other potential bargains that are out there now that all these stocks are absolutely getting crushed? I want to know what are the stocks that I should be profiling on this channel, the Unrivaled Investing channel. I'm looking for unrivaled companies. This is the time to go shopping, folks. Maybe it's the time. That's the question. That's why you have to go one company at a time. You have to go bargain hunting, looking for the companies and say, hey, is this valuation compelling? Is this company unrivaled? And you have to check, what do their results say? You look at Roblox 3 months ago, everyone went, oh my goodness, this is so great. Look at all these amazing partnerships. This company is going to go to the moon. And the stock did really, really well. At then I was like, all right, these are good results, but let's pause here. The valuation's a little too frothy. Now I look at it, I'm still saying, look at this. This is still trading at like 10 times forward bookings. That doesn't strike me as crazy compelling for a company that needs to prove that they're going to reaccelerate their growth. That's just tough for me personally. But I want to find those bargains out there, and that's part of the unrivaled investing community, turning over rocks, trying to find these hyper growth companies or trying to find deep value companies. Anywho, if this video has been helpful for you, please make a point of hitting that thumbs up and hit that subscribe button. Thanks so much for tuning in.